The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we had a abysmal day in the cattle futures trade on Monday with expanded limits being taken advantage of to the downside. A much better day in the grains and oilseeds, though. Amid all the U.S.-China talk, there is a lot to unpack here. Let's dive in and get some thoughts. Joining us now, Tommy Grisafi with Ag Bull Media and Nesvik Trading. Tommy, what a Monday it was. You got grains sharply higher, at least in the beans, and cattle sharply lower. What a day to start the week, Tommy.
Jess, there's a lot of money flowing around. I mean, I'm going to get a little weird on you and say it. This ties all the way back to when gold was going up to 4,400. I told clients, if gold can move $1,000 in 40 days, maybe corn and beans and wheat can go up. And sure, it took the Trump-China news to get it there. And that's not even a for sure thing. You know, what scared me is I had a really smart client of mine say, what would happen if Trump said, we're not getting along so well, we're going to keep working on this stuff. So that is a risk. And speaking of risk, there is so much risk. Now, I watch your show daily. Sometimes I even have the privilege of being on it. And there isn't an analyst out there who didn't say there was risk to cattle to go down, but the margin calls. I've had people who were short futures. I had people own cattle, sold futures, did what they thought was right. You're like, you know what? This is $40 against you, right? Well, we just broke. I don't even know how much we broke. I'd have to go look. But it when you go down limit at 9 and then you go another 13, and you can drop $30-$40 here pretty quick. Now, interesting enough, if you want to talk cattle, is the cash markets were doing okay. Now, I think today finally there was looking at some quotes around cash trade. Obviously, if you're going to an auction, you're not going to go in there like a raging bull and say, I'll buy them. I mean, things are calming down, but maybe not for the right reasons. I mean, we didn't produce any more cattle, right, Jess?
Yeah, I mean, that's the thing. We still have cattle herd here in the U.S. that is extremely low. You know, all the talk about the beef imports, when you put it into perspective, I mean, it's like 2-3 days worth of supply coming in potentially here from Argentina. I mean, there's just all these things happening. And to your point, cash. That's what I'm curious about here in cattle. Last week, we were only $2 lower, really. Beef cutouts were up at midday here today. It's the futures that are crumbling. Where is cash going to be this week? Because if futures keep tumbling, Tommy, I mean, that distance between cash and futures is going to get really out of whack again.
Yeah, but let's talk about that. Let's talk about hedging 101. You own the cash and you sell the futures. And the cash has been trading way above the futures. This has been a cash-led bull market. People who are fundamental, let me shut this thing off. I got something dinging on me, Jess. People who are fundamental cash traders have just been understanding this market, right? And they're like, wow, this thing's big. This thing is really big. And maybe people didn't even believe it, right? I had clients call, hey, I hear cash is trading 10 above the board, 20 above the board. When cattle first got above 205, cash was trading 225, and you're like, we're going to have to converge. Is that going to happen? Now, if you are a future seller, if you are a hedger, this is ideal actually for a hedger, right, Jess? I mean, you're long the cash and you have these futures on, but what my fear is, and I'm pretty confident this, is real true hedgers started to get out. They start to have a hard time making margin calls. They got nervous. Maybe they were told that, this what's going to stop this? But think about all the things that were bullish. And really this when Trump put the tariffs on Brazil, that was extremely bullish. This whole thing with Argentina, we can do the math, and we know the math ain't mathin' from what we import from Argentina and how long it would take to get it. But if President Trump goes to this meeting with Brazil and they say, you know what, we're all getting along better. We're still pissed off at Canada over their commercial, but Brazil, you're in our good graces, right? And they take off those tariffs in Brazil. And now all of a sudden something changed, because instantly we can get that product back to the U.S., correct?
As far as I understand it, I'm no expert on that piece of it, but if we start talking beef imports from Brazil, that's definitely a different conversation here. And so I think, to your point, hedging 101, risk management, this is something we've been saying for so long, and I know it's a different conversation for everybody. It's a difficult conversation, but This is a case in point, and I could even rope the grains in here as well. I think right now, with all this volatility and certain uncertainty with trade policy and more, this is a time to be, studying up and risk management be for your operation, Tommy.
Yeah, absolutely. And we have to understand, that the banker has to be on board. Everyone needs to be on board. I mean, you can't in this fast moving world of sending in money and not sending in money. Everyone has to be, you don't have a few days to talk about getting more money. Like, the money is due. And so we're trading on margin. This goes back to futures and options have risk, every disclosure we've ever had, but they let you put on a lot of risk with maybe not a lot of money. And so when the market moves outside of those bands, right? And that's what we're doing. I want to bring up a quote from a movie, this the Italian in me, but there's a movie, The Bronx Tale, okay? And they go on the bar and the guy says, "It's time for yous to leave." And the bikers don't leave, right, Jess? And he slams the door and he says, "Now yous can't leave." And then they beat the heck out of him. Okay. Now it's a gruesome story. But in the cattle market, in the feeder cattle and live cattle, now yous can't get out. Now, I think tomorrow we're going to trade. We traded off limit today in the live cattle. If you were involved in November feeder cattle, you can get out. There was only a little bit offered on the close. The back month feeder cattle is where the pressure is. It's where it's always been. Those were the first to go down a few days ago. Those are the most illiquid, massive spread trade. But with what's going to happen here with the OC contract, we're going to continue to have fireworks this week, and nothing is off the table. I would not put a limit up move off the table. We're going to have news out of Mexico. As you know, Jim Wiesmeyer's putting out articles several times a day. And depending on what they say with this screwworm, if they say, listen, borders closed, that's it. We don't feel comfortable with the screwworm. But what's happening is we went from something really, really bullish, where tariffs on Brazil, not letting cattle in from Mexico, fighting with Canada. We're fighting, arguing with everyone. To all of a sudden, hey, Argentina, can you sell us some beef? It's not that they're really going to do it. It's just the thought of it, right? That our country, our president, our administration, the USDA, Brooke Rollins, they're becoming more sourceful. Now, one of the greatest mistakes I ever made in my trading career was President Joe Biden went on national TV and he said, Russia's going to invade Ukraine, and wheat was trading $6.50. I didn't believe him. And about 2 weeks later, it was trading $12. So when the president of the United States says, we think we have a way to lower cattle prices, you might want to lay some risk off. And there's LRP, and there's puts, and there's selling futures, and there's all these things. But to the defense of the people, to the cattlemen and women in the hedgers, they've done that. They did that $50 ago, $25 ago, and at some point they get exhausted, and that's what makes the top of a market, and that's probably what just happened. Now, there's things going on in LRP where these LRP, they get a little creative in doing stuff, and you might hear the rumor mill start to come around of people who just have horrible positions on because they can't adjust those positions. We all say, hey, futures and options have risk. We understand this risk. But when you can't get out, like that scene in the bar where they close the door and say, now you can't get out, that's where I get uncomfortable. As a trader, as a broker, as someone who's helping, we're all grown men and women. We can take our lickings. Anyone who's trading and part of this administration, one day Trump's going to say something, you're going to feel like the smartest person ever, and you knew. The next day you're going to go upstairs and tell your wife, you know what, ramen noodles for the rest of the week because we had a bad one today, right? And we're all on both sides of these trades, whether it be the tariff. Look where the stock market is since those tariff lows. I mean, the stock market's at all-time highs Friday. Now it exploded today. So the hits keep playing, and it's hard to stay ahead of this administration. But for some, it's creating a tremendous amount of opportunity, Jess.
Well, and with that, just to touch on the grains and the U.S.-China talk here, and you brought it up, I mean, this isn't a done deal. This is a framework, and they're going to talk about this. Nothing is signed. It's nothing. Everything is in play when it comes to what's happening with the U.S. and China here. And if China and the U.S. come to an agreement and they come back, I said on this show, and I'll say it again, I'll eat my words that I was wrong when I said I didn't think China was coming back. But again, this is all still up in the air, but again, I'll come back to it's another case of risk management 101. You got an opportunity here with Monday's trade, sharply higher in beans, etc. So I mean, there's a lot to unpack here, a lot of unknown, but to your point, maybe some opportunity, Tommy.
Right. But speaking of unpacking something, the American farmer just worked their butt off to hide these soybeans like a squirrel hiding nuts before Christmas. They don't want to go to the bin and get them out now because now they got to go harvest corn. And then they want to celebrate Thanksgiving with their family like everyone else. So now the outside market, if there is a bid, if China does make a purchase, which from my sources, they haven't bought anything. Right now, this is a hot air trade. I'm not against it going up. I'm all for it. If you're an American farmer, you should say, you know what? The government shutdown was okay to me. Prices rallied, right? But things could get good. We could open the government back up. They could send money to farmers. We could have the high price. I don't think you're going to have both for too long. I don't think you're going to have this big soybean rally. And hey, farmers, here's a big package of money. So be careful. If they're giving it to you in the market, you might want to protect some of that and take it price. I do think the government money's coming, but they might tone it back a little, Jess. They know how to do math too, you know.
That's very, very true. Very, very true. Tommy, again, I know wild day Monday, and who knows what the rest of the week is going to bring us. Final thoughts. What would you leave folks with here today?
2025 isn't over yet, and 2026 is going to happen. We're going to have more of this. You got to keep some powder dry. We're all going to get on the wrong side of something. You got to be able to maneuver, adjust, move forward. If you need to take a lick and take it. But, an old friend of mine in the industry, he said, never lose so much in a day that you can't come back tomorrow. So whether you're out there watching this, you're a trader or a hedger or a farmer, don't take, as a farmer and a rancher, you're already taking a lot of risk. If there's a way to use the markets to take some of that off, do it. Now with that, on the optimistic piece, the American stock market is at all-time highs. That's really great for the rich people. The rest of us, Jess, are going to get up and go to work tomorrow.
That's a good point. And I know if folks want to reach out, have a conversation with you, it's just as simple as going to the Ag Bull Media website, isn't it, Tommy?
Yeah, we got a brand new website. Super pumped about it. www.agbull.com. Hey, if nothing else, just stop by and say hi that you watched this video. Just put in your email. I won't even bother you. Just say, hey, I watched you and Jesse and I got a kick out of it. And everyone get some rest. Tomorrow's going to be busy also, my friend.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.